If you're concerned about the red that we're seeing in the cryptocurrency markets this week, don't be, because this video is going to tell you, it's going to prove to you why the bull run is far from over, why the best is yet to come, and why you should be buying up this dip. So I'm sure you guys would have heard of this Evergrande news, and I honestly think this was FUD. I think this is an opportunity for the media to put out a story and create fear in the market so that smart money and whales can accumulate more cryptocurrency. They do it all the time, and I don't see why they wouldn't do it now, especially in September, just when we're in this last leg of the bull run. Let's look at Bitcoin's chart historically. How has Bitcoin behaved in the months of September for the past 4 years, or over the past 4 years? Like, what has Bitcoin done in the month of September? We can see in 2017, we saw a dip. In 2018, Bitcoin was red. In 2019, Bitcoin was red. In 2020, red. And now here we are in 2021, and Bitcoin is dipping. We've had this pretty significant dip. And it's really interesting because, you know, Bitcoin dipped in the 2017 bull run in September, just before it kind of had this massive, giant run up. And I know they say that history doesn't repeat, but sometimes it rhymes. And I definitely think that's something to keep in mind and keep on your radar right now. So believe it or not, this decline in September is nothing new. There's a lot of investors, there's a lot of people that kind of speculate on why September declines. What happens? Like, what's the phenomena? Like, why does this keep occurring? Maybe it's the fact that people expect it to happen, and so then it happens. But yeah, it wasn't just the cryptocurrency market, it was also the stock market, and people expect not just crypto, but stocks to decline in September as well. So looking at the market historically, we can see that since 1950, the Dow Jones and the S&P 500 have averaged a decline during the month of September, and that this September effect is a market anomaly, and it's unrelated to any particular market event or news. So we really have to question, is it the Evergrande news that created this decrease in market, or this red event in the market? The September effect is a worldwide phenomenon, and it doesn't only affect the US market, so it's worldwide. Okay, just to show you guys how consistent Bitcoin has been, let's go to 2013. Let's go to like this bull run in 2013, where we saw again a dip in September. So the consistency is kind of uncanny. But more than that, there's been a lot of people, respected traders and people within the cryptocurrency industry, that have said that 2021 bull run has been mimicking the 2013 bull run. And I find that really fascinating because, you know, in this bull run, we had like a mini bear market. There was a lot of people that thought we reached the bear market in May. And the same thing happened in 2013. In and around April, May, Bitcoin kind of stalled, and then there was like this mini bear market right here. And then it began to rise up towards July, August, which is what happened in 2021, this year. And then again, had the bear, or had the decline in September. And then after that, we saw this blow off top around December, January. And historically, Bitcoin has always had this blow off top in December, January. So that's something to keep in mind. Guys, looking how the RSI has behaved during a blow off top for Bitcoin in the past is really fascinating. So you can see that we hit this like 90 range in the RSI twice in 2013. And in 2017, when we had the blow off top, we were just below 90. And then in 2021, this year, we're above 90. We've hit it once. And what's really interesting, and this is again correlating 2013 to 2021, is that we have this dip right here in the RSI. And if you look, it's like the same kind of level as it is right here at the same kind of time frame. So I'm not going to be surprised if the RSI behaves very similarly to what we saw in 2013. Okay, so what we do want to see for Bitcoin is we want to see these spikes in volume when the asset does decrease. So on the 22nd, that's when we really had that giant drop in Bitcoin, but then we have this like big spike in volume here and here, which is really positive to see. Now, I know people say that this could be a dead cat bounce, and that's true. Like, some people just like buy an asset when it's dipping or as it's dipping, and they profit off the bounces. So when an asset decreases and then it shoots up and then it decreases again, people buy that dip and then profit off those bounces. That's called a dead cat bounce. But I'm going to show you some on-chain data that proves that this is most likely not happening. Now, the way to make money in cryptocurrency is to follow the smart money. So the people that have been through this Bitcoin volatility before, the people that understand how Bitcoin works, that know the name of the game. So we can kind of get a glimpse of this in this on-chain data because, and it might look a little bit confusing at first, but the purple spikes are representative of years and the time that it took before that Bitcoin was sold. So how long someone was holding that Bitcoin before they sold. And the darker the purple, the longer they waited until they sold their Bitcoin. So you can see that the smart money, people that have been in the game for longer, during 2017's bull run, they sold in and around January. That's where we see these giant purple spikes. And we haven't really seen that in the 2021 bull run. And, that can be indicative of the fact that the smart money isn't ready to sell yet, that they haven't seen the top of this bull run and they know that the top of the bull run isn't here yet. And even looking back to 2013's bull run, we can see that at the top of this bull run, we had more of these like purple spikes, notifying us that the people holding for longer, they were selling right here. They were selling right at the peak of this top. So something that helps me understand whether we are still in a bull run or a bear market is the SOPR, the spent output profit ratio. And just to simplify it for you guys, it's basically price paid versus price sold. And the quicker that it bounces off this black line here, just to simplify it for you guys, the more indicative of the fact that we are in a bull run. So when it bounces upward off the line, people are in profit. When it bounces consistently downward off the line, people are generally in loss. So that indicates that we're probably in a bear market. And just to kind of show you what a bear market looks like, you can see that the SOPR is bouncing consistently off the black line downwards. So we are most likely in a bear market. People are generally making losses for Bitcoin. And as we move towards a scenario where we're bouncing consistently upward, the black line, people are making gains. People are profiting off this market. We're in a bull run. Now, what's really interesting is in the 2013 bull run, we had this mini bear market in and around May. So the SOPR bounced downwards off the black line. People were making losses, but then it began to gradually start bouncing upwards off the line, indicating that we're back in the bull run. And we can see the same thing happening in 2021. And I know I'm correlating the 2013 market to the 2021 bull run, but I think they have so many similarities and it's something to keep in mind. But yeah, we had the same thing in and around May. The SOPR started bouncing downward from the line, but then it started to consistently bounce upward from the SOPR, or the SOPR started bouncing consistently upwards from the line, indicating that we are still in a bull run. Now, I don't think the SOPR has bounced consistently downwards from the line enough to indicate that we're in any sort of bear market. Generally, looking at this graph, it's showing me that we are still well on the way in our bull run. Okay, so another important metric to show you is the percentage balance on exchanges for Bitcoin. Now, this is really fascinating, and you're probably thinking, why does this matter? Well, think about why someone would take their Bitcoin off an exchange and why they would put it back on an exchange. So if you think that the price is going to rally, you're probably going to take your Bitcoin off an exchange, put it in a safe place, maybe on a Trezor wallet or a Nano Ledger wallet, or maybe into some DeFi so it can make some interest before you sell. And generally, when people are ready to sell their Bitcoin, they're going to put that Bitcoin back on exchanges so they can sell it. And because that's where you sell your Bitcoin. And this is really interesting, like to see that when we had this peak in May, people were beginning to put that Bitcoin back on exchanges. We can see that the percentage of Bitcoin on exchanges had risen. But now, Bitcoin, like the percentage of Bitcoin on exchanges currently, all exchanges, 13%, that's nothing. This is the lowest percentage of Bitcoin that has been on exchanges in the past 12 months. Okay, so some critical advice that I want you to take away from this video is that I want you to align with the smart money. I want you to align with the people that know how the market works, as I've shown in this video with the on-chain metrics, how smart money is moving, what they're doing. They know how the volatility works. They know how to get the most out of this market. Obviously, the best of opportunities come when everyone is in fear, when the market is low. And lastly, if you want that life-changing wealth, cryptocurrency is your best bet. It is the fastest growing asset of all time, and you just have to look at Bitcoin's chart to know that. Now, if you have any other coins that you're looking to buy up for this dip, I highly recommend looking at my video on Harmony One and Algorand. Thanks for tuning in, and I hope to see you next time.